In this module, we will understand the basic of insurance. What is insurance and why is it important? Insurance is to provide protection to a person or an entity from any sort of financial loss caused due to events like fire, accidents, hospitalization, earthquakes, etc. Let us see with the help of an example. Ram went for a movie and parked his car along the roadside. Just when he got off the car, a coconut fell on his car, damaging its window pane. Ram realized this would be a bit heavy on the pocket, but he did not worry as he had an insurance with his insurance company and his insurance company would bear the expenses of the damage. In these type of uncertain scenarios, there is one thing common, and that is financial loss. Insurance compensates these financial losses. Let us now understand a few more concepts of insurance. Insurance contract. An insurance contract is a contract between the insured and the insurer. Let us understand who the insured is and who the insurer is. An insured or a policyholder is a person or an entity that buys an insurance policy and is covered against financial losses. An insurer or an insurance company is an entity which provides insurance and undertakes to compensate. Now, we need to know how an insurance contract comes into existence. The process of applying for insurance is called proposal. When one party proposes and another accepts the proposal, then it is a valid contract. So who do you think makes the proposal to whom? The insurance company to the buyer of the policy or vice versa? Well, the buyer of the policy makes the proposal to the insurance company. Let us understand this with the help of an example. When applying for insurance, the first thing you do is to get the proposal form of a particular insurance company. After filling in requested details, you send the form to the company, sometimes with a premium check. This is your offer. If the insurance company accepts your offer and agrees to insure you, this is called acceptance. In some cases, your insurer may agree to accept your offer after making some changes to your proposed terms. For example, charging you a double premium for your chain smoking habit. To summarize, after the insurance company agrees to take the risk, the contract is formed and the policy comes into force. So what can be insured? Insurance can be taken for both tangible and intangible assets. Tangible assets are those that can be touched and felt, like a car, human being, etc. Intangible assets are those which cannot be touched or felt. Now let us understand how an insurance works. A large number of people exposed to a similar risk of loss are gathered. Each member pays a small contribution known as premium. A pool is created. This fund is then used to compensate the few members who will suffer the particular loss. Let us understand this with the help of an example. Suppose there is a group of 100 people for a common purpose. Each member contributes 100 rupees every month for this purpose. Suppose Mr. Ram from this group falls ill someday, then the money is given to him from this fund. The fund that is accumulated is called a pool. The amount what each member gives every month is called contribution. So this is basically the concept of insurance. Let us see our next concept. We all have heard the terms risk, peril, hazard, though all of them mean the possibility of a loss and are used interchangeably. In insurance, these words have a different meaning. Let us see this with the help of an example. Ram is driving a car. There is a risk of car meeting an accident and therefore getting damaged. So risk means the uncertain possibility of loss. Suddenly he meets with an accident. Now this is the cause of the loss. Peril here means the cause of loss. If Ram broke the signal and then met with an accident, it means it increased the possibility of loss. Hence, this is hazard. I thank you so much for watching.